Hey everyone, it is Evan here from the Trade Risk on Friday, July 20th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we're going to jump right into the charts here with the S&P 500. This is the cash market, and this is a weekly time frame here. Each bar represents exactly 1 week worth of trading on this chart. Now, as we can see here on the performance for this week, we did finish just about flat here, up 0.02%. That's 0.52 handles here in the S&P 500. If we zoom in on this week's candle, we tried to push higher, we tried to push lower, but ultimately we closed exactly where we opened on the week, giving us a bit of a doji here on the weekly time frame. And this is coming at a significant area in the S&P 500. It's right around this highly anticipated, this highly watched 2,800 level. You can see we closed at 2,801 on the week, and we just came off of a nice 2-week rally into this resistance. A couple of weeks ago, we talked about the possibility of an overshoot here of this 2,800 level. When you get highly watched levels in the market, any individual stock, you tend to get games around that level. You tend to get the market overshooting or overshooting on the upside, overshooting on the downside, and really just getting some chop and some movement around those levels that traders are paying attention to really sort of shake things out and not make it as easy and clean as we may wish it was. So we do have perhaps a little bit of that this week with this overshoot, getting us all the way up to about 2816 here in the S&P 500, and ultimately closing off of the highs of this week right around this $2,800 level. So heading into next week, looking at the intermediate term time frame, this weekly chart, we really want to be paying attention to the lows from this week, which come in right around 2789, and the highs from this week around 2816. That is the sort of the larger range to be paying attention to, even for you shorter term active traders, the lows and highs from this week. But as it stands, we are still in this uptrend. We are grinding higher above a rising 8 and 20 period moving average. So we should give the credit to the bulls here, even though there has been some weakening in momentum into the end of this week. So looking at, let's go to the daily chart now, looking ahead to some of the nearby levels, we still have Tuesday's session, which when we did our midweek video on Tuesday, we outlined this session as a day to take notice, a day to pay attention to, and that was because on Tuesday we started the session off with a gap lower, gapping below Friday's lows and Monday's lows, and that would have been a good excuse for the sellers to really kind of take control of this market. That would have been a good excuse to kind of start breaking us down and start seeing a bigger pullback, but we didn't get that. We got the exact opposite. We saw the lows, the open of the session were the exact lows of the day, and then we drove higher throughout the session, engulfing the prior several days worth of action. So on our analysis on Tuesday, we basically said, look, for a good line in the sand now, it's Tuesday's lows. It is 2789. That is where you should be paying attention to for the S&P 500, and I still believe that is the case. Even looking at the way we closed out the week here, we tapered off of the highs. We closed at 2801, but really for me, I'm still paying attention to that 2789. If we started or if we continued to see more weakness into Monday and we saw a break and a close below this 2790 level here, that to me would suggest that sellers are starting to get a little more in control around these price areas, and I would become a little more neutral / defensive on the stock market if we started to break this level. That is approximately 1%, even 0.5% actually, from where we are trading right now. So that could happen very quickly. It is not a far ways away from current levels, but until and if that happens, we should still be respecting this uptrend that is in play here. There's a couple of different trend lines you could draw. saw. If you look at just the immediate action, you can go down to a more intraday time frame to get this trend line a little more precise. But you can see here, ever since we had this little pullback back on the 11th of July, you can see we have been kind of rising in this channel here. So kind of this yellow channel that you see, the two trend lines that we just drew there. Or you could even take a more sort of steep approach from the lows here back from July, and you can see there's just a lot of confluence right around this 2800 level, and then this 2790 is this nice horizontal level that comes in around Tuesday's lows. So I think, again, you basically have a nice level of an area of support right in here between 2790 and 2800. If we start to break below that, again, that's right where price is trading now, then I think you know, for you active traders at least, you can be a little more defensive, conservative, aggressive shorts, start to get a reason to sort of jump in here for the S&P 500. But if we do see a hold here, if we see some type of gap up on Monday, if we see some type of gap to the downside, and then a rally again back north of this 2800 level, then I think you do need to still respect price and this uptrend and these moving averages. So good amount of confluence here, some good levels to pay attention to if you're shorter term, if you're active, and if you're more in the intermediate term time frame. Again, look back at this chart, use this week's lows, and then some of these moving averages that come in here on the weekly time frame. On the upside, you have Wednesday's highs from this week. That's 28.16 or so to the upside. Those were the highs that we made on Wednesday. If the market can start to rally from here and start taking out Wednesday's highs, then all bets are back on for the long trade, for the uptrend to continue, and we would look back towards the prior all-time highs as the next significant area to pay attention to in the S&P 500. So all in all, S&P 500, doji for the week. Bulls do remain in control here, but momentum has tapered off into the end of the week. So I think it's a coin flip into next week. No reason to really be aggressive right here. I think it's a tricky spot in the market. Having a little bit less exposure makes sense to me, but it all depends on your strategy and your time frame. So that is the S&P 500. Let's go to the IWM. This was the brighter spot for the bulls in this week's trading. You can see we did finish up a little over 0.5% here for the IWM. Not quite back to the prior highs here, but holding on exactly where it needed to, right around this 167 level. This was support back here through the beginning to mid-June, and this is acting as support now and beginning to mid-July. So this 167 area is a good one to pay attention to going forward. You can see we are kind of we're holding above 167, but still trading below the highs here, the all-time highs right around 170 in the Russell 2000, the IWM ETF. So maybe a little bit of sideways, a little bit of chop, a little bit dancing around in this channel, in the sideways kind of range here. But the longer we can stay above 167, I think the more constructive we would be for the Russell 2000 to eventually attack these highs again and continue this trend to the upside. If we lost 167 next week, then again, all bets are off, and then the sellers start to get the upper hand here as we start to break this upper level support. That is the Russell 2000, NASDAQ 100. You can see again also holding up here, momentum kind of tapering out into the end of the week. We saw volume uptick just a bit here on Friday, and I think we have our good line in the sand to use, this 170, 750, 178 area. That's essentially where the market opened up on Tuesday and proceeded to just rally throughout the entire session. And if we start to lose Tuesday's lows, again, I think that is the short-term level to pay attention to. That would give the shorts an excuse to potentially get aggressive on the short side, and that gives the longs a little bit of an eject button there as we fail to hold the June breakout levels that we broke out from back in early July. So that is the market environment overall. Bulls continue to dominate here on a trend basis, but they are losing some momentum into the end of the week. So let us get into some of the other major markets now. We got TLT falling a little over 1.5%, finally getting that thrust away. We talked about the fact that they were rallying and were kind of bumping up against the top end of the range here. This was a significant area, this 123 level just underneath it, and you can see we did finally get a break and a kind of a thrust below. Volume wasn't super high this week, but still price action perspective here. Let's clear out this rectangle here, and you can see we did break below the past 2 weeks lows, and we are coming back into the 20 period, some of the shorter term weekly moving averages here. So sellers making a good attempt at breaking this market down right now. We got this trend line that extends from the May lows, and you can see we are starting to pierce and break below that and close below that. So it is a time to be cautious here on the TLT. We got a potential breakdown in the works, and you got an uptick in volume here on a daily chart for the TLT. So sellers are going to want to see progress to the downside here. Made a good attempt at breaking us down on Friday. Let's see if they can continue that into the next week. For me, I'd want to be a little cautious here. Wouldn't want to try and dip by this or step in too aggressively until we could start to repair and reclaim maybe this trend line up north of 122. Next up, we have oil USO here. Let's see, on the week did finish down 2.21%. It was well off of the lows, however. It was a high volume week. You could see we did get down to about $13.75, but we closed about 40 cents above that level. If we go to the daily chart here, you can see a good amount of volume coming in, and still just kind of kind of a spot that needs a little more proof one way or the other. We've had this nice pullback here from 15.15 or so, 15.17, all the way up at this level, and we had about a 10%, 9.5% pullback down to these lows here. We're getting a little bit of a reaction to the upside, so let's see if we can reclaim these moving averages. We have the June lows back down here around $13. That's where the bulls are definitely going to want to step in to prevent a further pullback, a further breakdown in price. But for now, I think the longer term uptrend is still intact, but it would be beneficial for the bulls to really hold these recent lows down here around $13.80, stabilize us above some of these fast moving averages, and then start to lift us higher if this trend is going to continue. But for me, not really a high probability spot one way or the other. Natural gas also on the week, closing off of the lows. You can see here a little bit of a hammer, closed down just slightly here on the week, but if we go down to that daily chart, it was really Thursday's reversal session. We closed up 1.31% on Thursday. We briefly made new lows, and then we had really a multi-bar engulfing session on Thursday, and we did hold on to the majority of those gains. We didn't really add to those gains on Friday, but we did hold on to the majority of them. So be interesting to see if this is a short-term low here for natural gas, or maybe a longer-term bottom here for natural gas, given the high volume reversal. But it is, as it stands now, still in the context of a downtrend, so we should still give the sellers the benefit of the doubt here. And it is, again, an aggressive sort of counter trend trade if you're looking to place a mean reversion. Doesn't mean it can't work, just means it's a little bit aggressive against the recent multi-week trend to the downside. Next up, we got gold. Gold here continues to get beat up here this week. Again, it did close off of the lows, but still finished down almost 1% for GLD, slightly higher volume. This has been breaking down and trending lower ever since the breakdown here back in May, and this week again is no different. It did have a little bit of a recovery here Thursday and Friday, but still you can see from these moving averages the alignment of them. They are still bearishly aligned. Prices below them. We need to give the benefit of the doubt to the sellers here. Are we oversold and are we extended to the downside? Absolutely. So if you're a short-term tactical trader, you probably could find some mean reversion here. but structurally the trend is to the downside in GLD, so benefit of the doubt goes to the sellers. And silver really has picked up some momentum to the downside as well, was lower 2% here on the week. It did close well off of the lows, but again, very similar comments to GLD. The trend is lower. It is extended to the downside, but structurally this downtrend is very much intact. So that covers, I believe, all of the major markets there. Let's get into some of the individual sectors here. We'll sort them by the weekly performance, and if we look here at the week's performance, it was financials top of the batting order here, top of the relative strength, 2%, 2.15% to the upside. It did close well off of the highs of the week, but still, again, nice firm 2.15% to the upside. You can see it did tag that $28, and it is trying to get back above some of these faster weekly moving averages. So when we go down to the daily chart here, it still looks like it is in a sideways channel. It still needs to prove itself. It really needs a breakout above 28.25 or so, 28.25. I think getting back above the May-June highs here is going to be important for the financial sector of the market. Until and if it does, I think we still need to be a little bit suspect here and basically treat this as a sideways range until proven otherwise. It had a nice rally from the bottom end of the range back to the top end of the range, but it's still in that range. So I think at best we're back to the top end. I think aggressive traders will be shorting the highs here around $28 and continuing to play the fade 28 and buy 26.50 or so, and just play this game until we get a breakout in either direction. XLI, so industrials, were up about 1% this week. Again, kind of a similar situation to financials here. It still isn't out of the woods yet. It had a nice rally back up towards recent highs, the June highs, the May highs, but structurally, not a whole lot has changed. It's kind of a loose, sloppy pattern here, and until and if it starts taking out these June highs up around $77, really, it's tough to claim a real victory here for the industrials. It really just looks like this pattern is kind of widening out and it is moving sideways at best. Staples, number 3 on this list, did close up positive 0.23%, almost 1/4% here for the staples. Some pretty good volume coming in here at the end of the week and for the week in general. It's now had 3 weeks in a row to the upside, and really it's been 6 out of the last 7 weeks it has progressed to the upside here. So from all the way to about $49 to just about $53, it is just grinding higher, starting to repair some of this damage here. So when we look back at the daily chart, we really have staples kind of going up in this shorter term trend, and it is coming into the April highs here, which could offer some resistance around 53.50 or so. So good rally, nice progress. Tough to jump on board right now, but it is recovering off of the lows, but not out of the woods yet. On the downside, we have energy, which was the worst performing sector of the market, almost down 2% here. And you can see when looking at a weekly time frame, even though it was down 2%, structurally not much has changed. It really does still seem that XLE is moving sideways in between a range here from 73.60 all the way up to about $78 or so. And this is really just a sideways range where we are moving sideways and we haven't seen much activity outside of this one way or the other. So we should really just be kind of playing this range and staying patient, waiting for a resolve one way or the other. Second worst performer of the week was healthcare. Healthcare was down a little under 1% on the week here. You can see it just did have a nice 2 weekly back-to-back weekly performance to the upside, 3% for the first week of July, followed up by 1.6% for the second week of July, and now this week we're giving a little bit back. This is a little more interesting to me because it does seem like it's trying to break loose to the upside despite this week's pullback. So for me, I think as long as it stays above, say, $86, I do like the potential here in healthcare to continue to trend higher. It is gaining some momentum over recent weeks, so even though it was in the bottom bottom performing sector of this week. I still like healthcare. Biotech has been perking up as of recently. Lots of names on my scan list have been returning from biotech land. Finally, XLB. This was the third worst performing, 0.5% to the downside, and this still looks like a mess here on the weekly chart. It's stuck in this just really kind of overlapping sideways range. If we go down to the daily chart, again, you can see just a lot of mess here. Looks like a headache when we look at this price action. We got lots of overlapping bars, lots of sideways movement. We have flat moving averages. So for me, XLB really just isn't that interesting until we start breaking down below $57 or until we start breaking out above 61, 61.50 to the upside. Really, I'd rather just look at maybe some individual components and then just give this the time it needs to resolve itself. So that is everything. Top 3 sectors, top 3 bottom sectors, covered all the major markets, covered the market environment. So hopefully that better prepares you for next week. Thanks as always for tuning in and watching these videos. You can subscribe to our YouTube channel, bottom right hand corner of your screen. Every Tuesday and Friday, we do market recap videos just like this. And on Wednesdays, we do some trade ideas, some trade setups for names, strong technical setups that you may be interested for your watch list. So have a great weekend. Thanks as always again for watching, and I will talk to you next week.